From retiring early to paying off student loans, it is Money Monday, where we discuss easy ways to understand our finances. Here to help us out is our financial expert, Paul Hood. Paul, it's good to see you. Hope you had a great weekend.
Did, yeah.
The student loan payment freeze is set to expire at the end of the month. Some background for people. You know, during COVID, it was paused, but it's going to restart, supposed to at least. And so our first question comes from Ginny this week, and she says, with inflation where it is right now, I'm worried about having to get back to paying off my student loans. What can I do to make the process as easy as possible?
Well, you know, we get this question a lot about inflation, and people are struggling. I mean, the bottom line is the dollars that used to go a certain distance don't go as far anymore. So everybody's trying to figure out, how do I stretch that dollar even further? And, you know, I would not be surprised if they don't extend it again, because like I've said before, the deadlines really don't mean anything until the day after, because even up to the day, they can extend it. So, you know, I feel for it, just got to budget. Maybe, you know, use the cash envelope method to control costs and see where your money's going. But, you know, depending on the financial institution, sometimes they'll give you a reprieve too.
Yeah, and you know, some people haven't been paying that for 2 years now, so.
Yeah.
Yep. All right, our next question is from Roxanne. She says, I'm not 59 and a half yet, but I still plan to retire early. Is there a way to get around the 10% penalty from early withdrawals from my 401k?
So that's a great question from Roxanne, and a lot of people don't know this answer. We're all conditioned that retirement takes age, but it doesn't. It takes money. But the IRS, Congress, the lawmakers don't want you to take out your money before you're 59 and a half. It's really to our benefit to try to discourage that. But there are a couple of exceptions. One is if you separate from service after age 55, not 59 and a half, 55, and you take money from your 401k, no 10% penalty. Okay. If you take that money and put it in an IRA, though, that age 55 exception doesn't apply. The number one thing that people do, though, is there's a section of the Internal Revenue Code called Section 72T, and if we take your money and put it in an IRA, and you do what's called substantially equal payments for the greater of 5 years or till you're 59 and a half, you don't have to pay that 10% penalty. So what we do is we take that money and we act like we're turning it into a pension. You get a regular monthly check, and then you don't pay the 10% penalty. And the problem is, what if you have an emergency or something? So usually what we do is we recommend people have a combination. Leave a little money in the 401k for emergencies until you're 59 and a half, move the rest over, and we'll do that 72T.
Interesting. Yeah, I bet a lot of people don't know that. So very helpful. And then our last question today is from Chelsea. And Chelsea says, I have the power of attorney for my 91-year-old father. He hasn't filed a tax return in 10 years, but has taken some withdrawals from his Edward Jones account. Does he need to file a return making over $25,000 a year? So
filing a tax return really doesn't have as much to do with age, it has to do with income. So if Chelsea's dad, if he takes money out of an IRA, probably has to pay taxes. If he sells something in his after-tax account that creates a gross sales price, probably has to file taxes. Making over $25,000 doesn't necessarily mean he has to. So it's going to depend on that numbers, but it wouldn't matter if he was 20 or 120, it's based on income.
Okay. Paul, thanks so much. Great advice. Appreciate it. If you have a financial question that you would like me to ask Paul next week, just send us an email at moneymonday@griffin.news. We'll be sure to ask you.